Yeah, still morning. Geez, only 11
Oh,
o'clock.
that's
We got
11. That's
time.
still morning. That's still morning. How we doing? It's
Super.
August.
Yeah, life's good. Let's go.
Still hot. All right, let's go. Okay. So let's start Fulton County. This week we had 532 active listing status. That's a big increase. Certainly had 581 a couple weeks back, but 532 looks like a lot of new listings or relistings coming to the marketplace. We had 107 go under contract. And one of the talking points, Rick, this week that I think is fascinating is Logan with Housing Wire uh, talks about, and I can pull the article up here in a minute, but he talks about when mortgage rates go north of 6.64, that history says that he can point to that slowing buyer demand down. Yet, I'm not sure we've actually seen that up to this point. And I think this under contract category is where we will start to see that if it does in fact happen. So you'll see, but I can just put it up real quick. Mortgage rates as of close of Friday were like 6.83 on Mortgage News Daily, right? So we're certainly north of that 6.64 number. And are we going to stay there? Or is it going to come down? Is it going to go up? Your crystal ball is probably broken like mine as of 2026 crystal balls. However, just from a stats perspective, I'm kind of keeping my eye on this under contract. That's why I'm bringing this talking point up. So for 107 in Fulton County, if you look back, 107 is actually okay comparatively. Meaning we did have 121 last week. Of course, I was out of town. Uh, but prior to that, it was 96, 103, 96, 113, 111. Obviously, we saw some bigger numbers earlier in June, but 107 is kind of consistent with what we were seeing when the rates were below 6.64. So something to just keep an eye on, right? We've got 230 pending right now, and end of month closings were 216. What we know, Rick, is uh, everybody that had closings on Thursday and Friday, I don't want to say they partied with their commission checks over the weekend, but I know that they didn't close them out in the MLS. So I expect this number to go up. So that's probably not a true accurate number, being Monday after uh, Friday being the last day of the month, right? So we'll see. But just kind of comparatively, uh, end of June was like 277 and end of May was 295. So it certainly looks really low, but I don't trust the number. Is that fair? I do know that 223 was an accurate expired number because those are done by dates. 223 listings expired compared to 262 end of June and 226 end of May. So same kind of, I mean, not as many as June, but July still having a lot of expired listings. Any thoughts on these numbers before we roll?
It's interesting what the jump in closed unit volume was in July from the 6th to the 13th. Went from
Yeah.
190 to 300. So there are a lot of folks that are out spending their checks and haven't closed out their computers with closed data according to last month. So if we're at 216, we're ahead of last month. Hopefully the lag effect benefits us and there's more volume to be captured.
Yeah, and the other thing I look at on this, Rick, is I'm trying to determine was July equal, better, or worse in terms of closed units. And it looks, from a general standpoint, just looking at this, it looks about the same.
As good or
So,
better. And I
yeah,
think that whole 6.64 interest rate determination of, are consumers in or out? I think it's a cute headline grabber, but I think seven's really a landmark number that people start to think about the impact. If you found the perfect house at 685 or 645, I think you're buying your perfect house.
Yeah. And you're gonna refinance later, right?
Yeah, I mean, if they do dip or drop, but it's still, you got to remind people, man, well below historic norms. It's just, we're just coming out of a season, I say coming out, it's been a while since they've been elevated. But yeah, 3 and 4% are probably not coming back.
Yeah. All right. DeKalb County, 263. So they kind of consistent with last week on active listing status. A little bit down from the 300 numbers, but still a good amount of inventory coming to the market. There's 10 and coming soon. They had 64 go under contract. So I definitely see the last 2 weeks, DeKalb County was down. Um, we had 86 the week before that, and kind of going back into the June numbers, we were over 70 almost every week in June except for that last week. So 64 and 62 does seem a little low to me of properties going under contract in DeKalb. There's 143 pending, which seems decently strong compared to the last couple of weeks, and they had 137 close out. I still think that number is going to go north of that as agents close out their transactions. But comparatively, 176 and 198, 193, the two previous months. I don't know we're going to get that high in DeKalb County in the next couple of days. But 117 expired compared to 130 and 89. Still a lot of listings failing. And there's opportunity in that, right? If I jump to Cobb County had 289 active status changes, certainly under the 300 number. So it was a week for listings in Cobb County, but they've got a large 29 and coming soon. They had 93 go under contract. So 93 seems really healthy to me for Cobb County, where DeKalb seemed soft, Fulton seemed a little soft. Cobb seems actually pretty strong properties going under contract right now. They've got 156 pending, which is healthily consistent, certainly not 190 or 170, but we've kind of held the numbers in Cobb a little stronger than maybe the other two counties. And same comment, 137 looks really low. Expect it to come up in the next couple days. But Cobb looked like it had a good July. There were two really strong weeks in the middle here. Um, and we'll see, right? And then 116 expired listings, 111 the month before, and 77 the month before that. So there's still an increase in failed listings, right? Which is going to lead into a little bit of our talking points this week in some of the articles. Any questions, thoughts, comments? What's it feel like out in the marketplace? Loss for words.
Bueller.
Slow.
Slow.
Yes.
Okay.
My expression lately has been running through mud. Like I'm still running. It's just a lot of effort.
Okay. I don't think you're wrong in that assessment. There's an article here that I'm going to put up real quick that comes from the Zillow economist, Misha Fisher. And he talks about how agents are perfectly positioned to help consumer pain points. There's certainly some uncertainty in the marketplace, but we can win in this market. He's talking about how big data and statistics by themselves don't necessarily tell the whole story. It's a local picture, local game. We talk a lot about that. But there's a couple of talking points I wanted to hit. Let me find this thing here. All right. It's saying homes that are priced right are selling fast. They're still selling quickly. It's not a frozen market, but the homes that are anchored to what was happening in 2021 and 2022, those are the homes that are sitting. So I read that and I think about pricing is a skill set, and it ebbs and flows with the temperature of the market. But in today's temperature, I think the top agents that are having the right conversations around pricing are still winning at a big way right now. And I think the weaker agents that are letting the consumer drive more of the pricing conversations are frustrated, and their homes are sitting. And it's almost a tale of two markets, but it's the gap is probably a little wider right now around properties that are moving versus properties that are trying to hold out for prices that were, he used the language, anchored to what was happening in 2021 and 2022. Um,
Hey,
the other
Greg.
thing, yeah, go ahead.
Hey, it's Ken. So, some of those conversations are not good conversations. So, depending on whenever they bought and their lifestyle now, their lifestyle changes or their home needs change now, they may have bring money to the table. So, those are unpleasant conversations. But I've had probably five of those recently, and some are moving forward, some are just kind of waiting.
Got it. Um,
And
Rick, you
probably,
told the story of the 2 year listing.
well, I mean, the reason I shared that story earlier, I had a listing that took 2 years to sell, and I shared this at the top 10% mastermind. And it's not good for credibility when it takes 2 years to sell a listing as a real estate professional. But I had a client who consulted their shaman, and the shaman said it would be in 2 years. And jokingly, I said, 6 months from now, you're going to forget your shaman and blame me. Truth be told, it took 2 years, almost to the day. And she stuck with me. So part of the conversation I think we all need to continue to have is just one of integrity and authenticity and making sure that your strategy, the prescribed strategy, aligns with their goals. And recognizing that if you overprice, we may have to wait on the market to catch up to capture that price. And if you're willing to hold on, whatever you need and want is what I want to deliver. Again, not good for your reputation, but great for authentic relationship, building.
Yeah. Um, the agents who win in this housing market reset aren't the ones who are waiting for the market to normalize. Agents who know what's happening in their local zip code, they're the ones who can walk into any client conversation with the numbers to back it up.
Yeah.
I think what I'm the net of this article is the agents that are on top of the market and are communicating effectively and willing to have those tough conversations that Ken was talking about, those are the agents that are winning. And what's interesting in this current climate, Rick, we've got top agents that have big teams that are scaled out businesses, that their business is up year over year and they're selling more homes. And we've got individual agents that are on these calls and listening to what we're saying and taking it to heart and putting it into practice, that are growing their business in 2026. And yet that's not everybody's story. And it's the reason I'm talking about it is because I think it could be everybody's story if they take what we're saying to heart and put it into practice, right?
Agreed. I mean, and the difference, when you say I'm running through mud, I mean, I would be curious to dig into those circumstances that feel like that. But at the same time, if you had two motivated all cash buyer clients, it's a great time. I mean, if you're selling in the same market as you're buying, that's where real estate professionalism really shines. Your ability to say, hey, we're going to lose, we might get tripped up getting to first base, but by the time you round third and hit home, we've won because we're buying and selling in a common market where everybody's got the same downward pressure.
Yep. And then there's this article on Housing Wire. Logan puts out, it says, the housing market defies expectations even with higher rates. And he's saying, look, like housing demand still showed positive year over year growth last week, despite the hawkish Fed, the escalation of the Iran conflict, rising mortgage rates, yada, 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 we've had year over year growth in our weekly pending sales, total pending sales, and purchase app. However, growth has slowed down over the past few weeks as mortgage rates have gotten above my key level of 6.64. The longer we stay above 6.64, the softer housing demand gets. This has typically been the case over the past few years. So he's saying historically, if the rate stays above 6.64 for an extended period of time, we will see some softer housing. Um, if history repeats itself. But at the same time, he's saying, look, guys, in spite of all this stuff, 2026 actually doing decent and doing almost a little better than what 2025 did. So hang in there, right? Like, look, the crystal ball is broken in 2026. The predictions of what's coming in 2026 is broken. Like, who knows what's going to happen with the Iran conflict? Who knows exactly what's going to happen with inflation? Who knows what's going to happen with the price of oil, which all translates to our mortgage rates. However, we did get good news 2 weeks ago that the Fed didn't do anything to the Fed rate. So I believe that to be good news, which just says we're going to let everything that's going on that's affecting the industry dissipate over time right now, or at least for the next 60 days. And we have seen the mortgage rates come down when it felt like the Iran conflict was going to resolve itself. So if that feels like it's going to resolve itself, if oil starts flowing through the Strait of Hormuz at a faster pace, the price of oil comes down, our market will speed back up rather quickly. It's really hard to predict. And there's certainly not a crystal ball that's worth anything today to make any kind of prediction of what that's going to look like. I don't know. Rick, you got a better crystal ball than me?
I don't. I just think this is the season to plant seeds and relational energy for your database, water,
Yeah.
fertilize. This is going to be one of those slow and then sudden recoveries where it felt like forever, and then you wake up one day and things are just better and optimism soars again. And so if you wait for the optimism to soar and everyone to catch on, you've missed a lot of opportunities to develop deeper relationships while we're in a little bit of flux.
There you go. Keith Sharp, you on the call?
He's on mute, but I see his beautiful face.
I
You're
saw
mute.
that article.
All right, it's coming. Here we
The first,
go.
first of
Mr.
many.
Crypto. Um,
Hey.
all
Be
right.
careful.
It's Bitcoin, not crypto.
All right.
Crypto is shit coins.
All right. Hang with me here for a minute.
Committed position. I love that.
So the industry is trying to figure out how cryptocurrency plays a role in real estate. And back in March, Fannie Mae came out and said they are going to start preparing to accept crypto assisted mortgages for the first time in response to a new product from Better Home and Finance and Coinbase. And I'm going to do my best to explain what I believe this is. The structure uses two loans bundled into a single monthly payment, a conforming Fannie Mae mortgage, and then a second loan secured by crypto collateral. Here's what I believe this looks like. I think somebody's going to get an 80% LTV traditional mortgage, and then Fannie Mae will allow a second loan, maybe a 15% or I don't know, 10% that
20%.
is secured by crypto, and they're going to value it for that collateral of $250 in Bitcoin for every $100 borrowed. So 2.5 times of collateral in crypto, or $125 in USDC for every $100 borrowed. here's the reality of what I think all this means. One, I would take this article, send it to your favorite lender, and say, "What do you know about this?" Two, I think there are a growing number of people that are engaged in crypto or Bitcoin, to Keith's point, and will start to ask questions of how can I leverage my crypto holdings in real estate? And I don't know that you need to be an expert on this. I think two things. One, uh, send this article to your lender, see if there's any information out there. One, two, I actually think this is more of a social media messaging thing that says, hey, my people that have significant assets in cryptocurrency, ever thought about leveraging that into real estate? Call me. There's been some new products coming to the market. I would love to share with you and talk to you about how maybe your crypto holdings can be leveraged into owning real estate. Um, and that is my uneducated best explanation of what I believe this article is saying. Is that fair? Anybody else have any thoughts?
It just speaks to the validity of Bitcoin because that's really the reference point they use. And the fact that the ratio is pretty high says, hey, we recognize that it's going to be volatile, but we all recognize that it's also probably not going away.
Yeah. And I think, if you haven't already, at some point in time, you're going to deal with a consumer that's going to ask this question. Hey, can I use my Bitcoin towards a real estate transaction? Um, I think it will become more popular probably in the next 10 years. But I think there's a lot of people out there that have holdings in Bitcoin that are thinking about how they can use that towards real estate. Got it? That was for you, Keith.
Thank you.
There you go. Second article. First time home buyers. I have said this 100 times. Just hear me out. The market used to be 40% of the homes sold were first time home buyers. It has shrunk down to 21% in 2025. We don't need to talk about why. I think everybody on this call probably understands why. But I promise you, back to my broken crystal ball, first time homebuyers will come back to the market in with a percentage of the market in a big way at some point. Affordability will reset, and whether the government comes out with incentives or uh, people they're left out of the marketplace. So what this article is saying is, are you doing first time homebuyer seminars? Um, and if you wait until the first time homebuyers come back to the market, it'll probably be too late. So if you were asking me, what would your business look like if once a quarter you did a first time homebuyer seminar, but it was more about the social media posting and the messaging and the invitations that actually built the pipeline of this for you in the future than actually how many people showed up to the seminar? And maybe you say, hey, the first hour is our first time homebuyer seminar. Stick around for the last 30 minutes if you want to hear about house hacking and maybe buying a duplex and renting out one side, or buying a house and getting a roommate, or whatever the house hack looks like. But that becomes part of the unique value prop to attend the seminar. But if you just put a first time homebuyer seminar once a quarter into your business practice and did a great job of telling the story and marketing to it, you will be uniquely positioned to take advantage of this wave when it comes. And it will come. It's just when we don't know. That's all I had to say about that. Any thoughts, questions?
Plant seeds, fertilize, water. One day
Yeah.
they're going to grow into fruit trees and you're going to be happy you did.
This is a segment that will come at some point in time. All right. CoStar. This one's funny to me. So CoStar owns Homes.com. The board of directors at CoStar is not happy with the performance of Homes.com. It's been in the news last 6 months, and they're trying to figure out what to do about it. Recently, CoStar reduced its Homes.com inside sales team by nearly 40% and begun shifting representatives into the field as the company prepares to roll out a higher priced advertising tier on the residential portal. This sounds like their strategy to increase revenue. I do believe we'll probably start to see some of this um, at Mega Camp, probably at a Homes.com booth or something along those lines. Um, it specifically says CoStar is simultaneously expanding a field sales team to 50 representatives across DC, Tampa, Atlanta, Dallas, and Chicago. So they're coming out saying they're focused on the Atlanta market. All this is I want you to be aware because you may get a sales call or you may walk up to a booth at Mega Camp in a couple weeks in San Antonio. Um, it Homes.com is one of the big housing aggregator sites, so it's worthy of us talking about it. That's all. Has anybody gotten a call yet?
I think what they're saying though, instead of inside sales, I mean, they cut what 300, 250, 300 jobs. And
Yeah.
now they're leaning into sniping instead of shotgunning, and they're showing up. And if you want to win business, this is something we've known all along, and I'm surprised they didn't catch on sooner. It's face to face, belly to belly, and toe to toe. It's relational energy that you get in the presence of people. And it sounds like they're going that direction, and they're creating premium services that require a premium relationship for trust.
Yeah, 100%. Platinum listings arrive in Q3, whatever that means, right? Um, Next article talks about this all-in-one tech stack is over. We're now building ecosystems. I think the real estate industry at one point in time thought, hey, I want to write one check for a platform that did it all. And a lot of companies tried to position themselves for that, us included. I think the next season of real estate's about a tech stack ecosystem. And an example of that is like Claude connecting to your Google and connecting to your Google email and your Drive and your calendar and uh, your CRM having a uh, Zapier connection with this other tech tool that does this, that, and the other. And the reality is, AI is going to speed this up, and AI is probably going to build ecosystems for us in the future. And the interesting thing of just having like an all-in-one tech stack is probably not the future of real estate, is what this article is saying. And I tend to agree. Any thoughts?
To me, it just says a room full of generalists are going to underperform relative to specialists. And when you start tech stacking, at some point you compromise the quality of many of the individual products while marketing the whole. So, and the
There you
fact
go.
that technology now is so interrelated, and the capacity to joint venture inside of one ecosystem, specialized tools that meet your specific needs, tells me that we're in an era where you don't have to go one size fits all.
Yeah. This last article, it's kind of a joke to me, but the America's hottest housing market, Hawaii is number one. But if I pull the list up here, here's the 20 hottest housing markets in the US right now. And here was kind of the weird aha I had, Rick, when I looked at this list. There's really not any major metropolitan areas on here outside of Tampa and maybe
Salt Lake.
Salt Lake City. So, what I believe is the bigger statement, I mean, I could joke about it, like half these cities I've never even heard of, like Red Hook, New York, Casanova, New York, There's a lot of Northeast on here. Um, but what I believe is happening is the Sun Belt in particular, in major metropolitan areas, secondary, had incredible housing markets for a number of years. And those markets are resetting right now, meaning we're not having big price appreciations. We're having a little bit higher failed listings than we've had in the past. As Thomas said, that maybe it feels like you're walking through mud, but those markets that we're in, especially Atlanta, are resetting right now, and we will be hot again in the future. It's just probably not today, and that's normal. I think major metropolitan areas are great places to live and sell real estate for sure. And because of the sheer size of our markets, uh, we go through periods where we're really hot. And then also go through periods where the market resets. And we're just in a resetting period right now. And we're not alone. I mean, these are Northeast, and these are interesting markets with the exception of uh, I mean, there's a couple cities in Florida, but nothing in Georgia, nothing in the Carolinas, nothing in Texas. Any of that Sun Belt area is just kind of void of this right now. So,
Well,
um, FY.
like anything in life, you can manipulate data to tell a story to capture eyeballs, and that kind of feels like this. It does say that some pockets are hotter than others, and you get to choose where you fish, and that there are some more fruitful areas. But curiosity struck me, Cazenovia, New York. I never heard of it.
Sounds like Casanova.
It's 20 miles southeast of Syracuse and 60 miles from Rochester, 55 from Utica, and it's 4.5 hours to New York City. So they must have had two or three anomaly sales on the lake there that were outrageously hot. I don't know how that became a hottest market, but never heard of it. So doesn't mean locally that's not the place to fish if that's what's hot, but
Yeah.
that's where
Well, you
you
could
as
also look at these prices.
yeah.
That
But
tells
there's
enough.
also there's even I can't even as I went down the list, there's not a correlation in asking and sold that led to the prioritization either. It is interesting to me that Naples listed as like an if you pop it back up for half a second,
Yeah.
here we go. There was Naples. That's near where I spend half of my year. 898 average list, average sales million two, but they've got a lot of expiring inventory. And certain, it's just certain pockets are hot, and so even inside of those markets. So anyway, know your local market so that you can speak intelligently to compel people to price right on the list side and pay the right amount on the buy side.
Boom. It's
You win.
August 3rd, guys. Make August great because
Love
we're
you
going to be
guys.
in the
Thanks for
fall
joining us.
here real soon.
Be
Bye,
good.
bye guys.